Gold has surged to a record high of $2,564 per ounce, reflecting a remarkable 10% gain this quarter. In contrast, Bitcoin, often hailed as digital gold, is struggling and has suffered a 7% quarterly loss. This divergence highlights why gold remains a superior investment choice compared to Bitcoin. Now, gold's recent performance is particularly impressive when compared to Wall Street's benchmarks, which have only risen 2% this quarter. Central banks are fueling gold's rally with significant accumulations in recent months. Unlike Bitcoin, which lacks backing from major institutions, gold benefits from robust central bank support. Central banks globally are increasing their gold reserves, driven by a shift away from U.S. government bonds due to rising deficits and inflation concerns. Gold's recent price surge indicates expectations of lower real yields and increased liquidity as central banks are poised for monetary easing. This environment is favorable for gold, which thrives in periods of lower interest rates and economic instability. Bitcoin, on the other hand, faces challenges from oversupply and weakening demand. Recent large-scale sell-offs by governments and liquidations have put pressure on Bitcoin's price. Additionally, Bitcoin's performance has recently aligned more with technology stocks, which are vulnerable to economic downturns, while Bitcoin enthusiasts might point to its potential for high returns. The recent data suggests that gold offers a more stable and reliable investment, especially in times of economic uncertainty. With central banks increasing their gold holdings and the potential for continued monetary easing, gold is well positioned to remain a preferred investment choice over Bitcoin. All right, for more on this, we are also being joined by Mr. Ajay Bagga. He is a market expert who is joining us from Mumbai. Thank you so much for joining us this morning.
Good morning.
Now, let me begin by a really basic question. Why do you think is gold surging now?
Well, there are a lot of reasons. Some of them you enumerated already. One is gold is a safe haven asset. So whenever there is geopolitical uncertainty in the world, we see people buying gold. Second, it is a good store of value, especially given the kind of fiscal deficits that are being run. If you look at the global debt levels, they are at about 3 times the global GDP. So governments are highly indebted, and that leads to currencies going down. And gold in that kind of a scenario is a preferred asset of choice. The third big reason is de-dollarization, especially after Ukraine-Russia, when the US seized about $300 billion of the Russian foreign reserves that were invested in the US markets, in the US dollar and the US government treasuries. The central banks have been very carefully building up reserves, especially banks like China, Turkey, and India. We have seen heavy gold buying. Fourth is the Chinese consumer. As the Chinese property prices have kept coming down over the last 3 years, we are seeing a lot of Chinese savings going into gold. India traditionally is the biggest buyer of gold every year. Nearly 750 tons of gold are bought by the Indian consumers every year. Now the Chinese consumers are also buying a lot of gold. And fifth is speculation. Gold is widely traded. There are a lot of ETFs, and hedge funds normally take a lot of positions in gold. So there are about 11 very strong fundamental reasons, right from demand and supply, demand being more than supply, geopolitics, central bank buying, consumer buying, safe haven buying, and fiat currency eroding, de-dollarization. All these contribute to the price of gold.
Right. Mr. Bagga, we also know that U.S. Fed's monetary policy decision is due this week. Now, what kind of impact do you think U.S. Fed's decision can have on the metal?
Yeah, see, traditionally, hedge fund managers say and the investors say that gold does not give you a coupon or an interest rate. So why buy gold? But when interest rates come down, the comparison with gold becomes more favorable in favor of gold. So as interest rates come down and the Fed cuts more rates, you will see gold rallying. So this rally, I don't know if it has already factored in next week's Fed rate cut, but gold is a beneficiary as the rate cuts happen, more because it becomes more favorable to hold gold rather than a very low yield asset like a US government treasury.
Right. That being said, do you see the possibility of gold hitting $3,000 per ounce soon?
See, if you look at the all-time highs of gold and you take out inflation from that, the 1980 high was 2,500. The 2011 high was a little short of $2,500. So historically, today, gold is much cheaper. A 1980 2,500 would translate into a very high gold price today if you put in the inflation that we have seen for the last 45 years. So it can go up. And only thing is gold has already run up a lot. So what markets do is they are forward discounting mechanisms. So the forward, all the favorable moves in gold may be already baked in. And you could actually see some pressure on gold on the actual event happening on Wednesday. But 3,000 is coming, whether by this year end or middle of next year, $3,000 on the gold on gold is very much happening.
All right, Mr. Ajay Bagga, he is a market expert who joined us from Mumbai. Thank you so much for joining us and giving your opinions.